Hello guys, this is Adam and welcome back to another video. So this video is going to be about the weekend analysis of gold forex XAUUSD. So before jumping into the video, we will analyze and we will see what are the upcoming major events and major news, high impact news in the next week. Yeah, today is Monday. I am recording this in 1:17 a.m. IST, and here Monday has already started according to Indian Standard Time Zone, and market is about to the weekend holidays are about to end here. As you can see, the market opens in 2 hours and 12 minutes. So in 2 hours and 12 minutes, the markets are going to open. So this is the I'm a little late because I was out of the station. So yeah, without wasting any time, let's get into the topic. So today, Monday, there is a high impact news of manufacturing PMI. As you can see here, at 8:30 p.m. IST Indian Standard Time Zone. So as you can see here, the actual value is most probably will be red because as you can see history, neutral is less and positive value is also less, but negative value, the what we will call this, the actual value is less than forecast. So there is a high probability for the actual value to be less in 8:30 p.m. So as you can see here, usual effect is written actual is greater than forecast is good for currency, and the currency is USD. As we know that USD is inversely correlated to gold. So if we get to see red means less actual value, this is just one of the probabilities. Most market will behave in a certain way that it's not necessary. Sometimes the analysis is something else and the market behaves something else, because the direction of liquidity is always fixed and market has to go in that way after the high impact news is announced. So according to my analysis, according to my set of probabilities, what will happen is, as we know, the impacted currency of this high impact news is USD, and everybody knows that USD is inversely correlated to gold. Like if USD is strong, gold is weak. If gold is strong, USD is weak. So if the news is negative, and here you can see actual is greater than usual effect, you can see actual greater than forecast is good for currency. Means if actual is greater than forecast, so USD will be strong, USD will be bullish, and gold will be bearish. But if actual is most probably, which is possible, most probably which is possible, if actual will be in red, which denotes that if actual value will be less than the forecast value, then USD will be bearish and gold will be bullish. So this was all about Monday's news, and here you can see on Tuesday we have job openings news. We will also get into that. I just explained you the Monday news in detail because Monday has already started. So I'm just giving you my set of probabilities that what you can anticipate as the same way that I do, but it's not necessary that market has to behave in certain way that we anticipate. It's not necessary. It can happen, it may happen. We just develop a bias, or you can say we just develop our own set of probabilities, and we don't have to. It is also not necessary to that we have to stick what we have developed in this news, because in high impact news anything can happen. So on Tuesday we have job openings news. On Wednesday we have which is GBP. Usually I don't trade. This is not in my set of trading setup. So still in GBP we have government Bailey speaks news, and in USD we have NFP. Yeah. So Wednesday will be going. Wednesday will have to be a big day for gold and USD, because we have NFP coming in on Wednesday, December 4, and on Thursday we have Uncle Powell, Uncle Jerome Powell speaks, and also unemployment claims. So Thursday is also going to be a very big day. Thursday will be, we have NFP on Wednesday, and Jerome Powell speaks, and also unemployment claims on Thursday. Thursday consecutive days, 2 consecutive days. Thursday, we are going to have a lot of volume. Lots and lot of volume. There might be, extreme uncertainty. So yeah, we'll see if we get, there are higher probabilities that we will get a bigger move, and yeah, we will try to capture. So it's on Friday we have the last huge impact news, and you can see here unemployment rate, non-farm employment change, NFP, some kind of NFP, and average hourly earnings. Three huge impact news on a single time. So yeah, this kind of makes the week very volatile, and there are higher probabilities that market will be uncertain. Volatility is okay. Volatility can create lots and lots of opportunities, but uncertainty destroys the trading account. So uncertainty is what you have to fight, and you have to stop trading during uncertainties. uncertainty. For example, there will be a lot of wicks, there will be no particular direction and stuff like that. So yeah, we will jump into our gold chart and we will see the analysis. Let's jump into the daily time frame. As you can see here, I have marked the supply zones and demand zones. We have a major demand zone on the below here, and on the upper hand side, if we consider this common rejection points as a resistance, so we have a major supply zone over here and also here. So we have a major supply zone over here, but as you can see, gold is overall in a bullish trend. But last week on Monday, like exactly 1 week ago, we got to see a very bearish candle, and this is just a 1 day candle, and the 1 day candle was around about 886 pips, which is completely abnormal if we consider this candle has occurred in between a bullish trend. So yeah, you can consider is that abnormal, and these are the situations which makes the market little bit what we like. It goes against our set of probabilities. Like if you have developed a set of probabilities, set of the set of anticipation scenarios, so this kind of scares the shit out of it. So yeah, 1 week ago. So overall, you can see that gold is in a bullish trend in a daily chart, and if we jump into the 4-hour time frame, you can see here, we can see a clear market structure over here, and we can see there are clean ranges over here. And if we break above this resistance over here, then we have this wick fill over here till up till here. And also if we fill this wick and we break above this wick, if we break above this wick, we also have clean ranges over here. And these two zones are very critical zones, because on the daily time frame, as I showed you, that these two are the major supply zones in the daily time frame. So yeah, market is most likely to respect them and reject. Huge rejection, huge sell-off can be coming from these zones after market reaches here. So yeah, there are high probabilities that market will be to reach the market here. What I will say, my English is little bit sorry guys, I'm little bit sluttering, but for the price to reach here, the market has to follow a very bullish trend. After that, if the market reaches here, then there are more probabilities, high probabilities from here to market to reverse the trend. Yeah, to reverse the trend. Like from here it will be bullish trend, it will trigger a bullish trend, little retracements, and from here, this point over here, these two zones, if not this, then this, from these two zones, the trend might be reversed from bullish to bearish. So yeah, this is the 4-hour time frame, as you can see. But as you can see, if you are comfortable in sells, so I think you can also consider yourself taking shots in gold, because there are no proper confirmation bias developed in bigger time frames, because as you can see, like in 1 day, as you can see, there is not enough volume in bullish candles. You can see here, like small bodies. This was a little big body, but still then the wicks are bigger. Wicks are more likely to be bigger than this body. So this is what kind of makes the trend uncertain. So on the 1-hour time frame, as you can see here, so we have this is a rejection point, which is to be respected, more likely to be respected. But in 1-hour time frame, we are not getting enough market structure. So for now, we will consider this as a common rejection point, or you can consider this or this, anything. But why I consider this? Because there is a 1, 2, 3, 4 common rejection points if you will consider this zone over here. So we will jump into the 30-minute time frame to get a very clear market structure. So as you can see here, we have achieved a very clear market structure over here. So as you can see, there is a clean range over here. This is a clean range over here, which is around 122 pips, which is a very good range if in London session or in New York session, if in pre-London or London Open, or in pre-New York or New York Open, if we get to see a breakout of this this support, if we get to see the breakout of this support, then there are high probabilities for the price to push down until this to cover up this clean range over here. And you can see here, there's a rejection point over here. So yeah, you can consider up till here, but this is candle closing is easy to target. So yeah, you don't have to cover up this full you don't have to, like, if you even executed your order here, you don't have to like stretch your TP till here. You can just take 40 or 50 pips and be okay. You can exit the trade, exit your positions, because 40-50 pips are like more than enough. 40-50 pips are like more than enough. It's a very good amount. And if we will see in 15 minutes, so we even got a even more detailed market structure, as you can see. So zones are a little bit refined. So impulse entries over here. If the if during London Open or New York Open or during pre-London or during pre-New York, if we get to see a breakdown of the supports, then we can take impulse entries over here. So if we are planning to tell, if we are planning to take shots, as you can see here, there is over. You can draw this also as a support over here, which is easy to target because it is near. And if you will measure this range over here, which is 36 pips. So yeah, you can target this range, and if after executing the order here, if the trade goes in your favor, then you can partial book here. And if after partial booking here, after partial booking of quantities, if the price breaks down this zone also with volume and with volume, so you can add some more quantity to maximize your profits and target this zone over here. This zone, okay, yeah, you can target this zone because I know in this on the bigger time frame this will be a major support, and this will be wicks in the bigger time frame, and we will see. Let me show you in the 30-minute time frame. No, in the 1 hour time frame. No, if it's no, then yeah, you can target this, no problem. Let this. Okay, perfect. So yeah, this is it. This was all. This was all for the video, guys, and hope you enjoyed the video. Hope you learned something from my analysis. Hope you have developed your set of probabilities and your set of anticipations. So this was all for the video. Thank you. Take care. Bye bye.